Today is Wednesday, April 2nd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests, which should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Market Research Analyst. Starting with the grain markets this morning, Mark, were there any big surprises in Monday's USDA quarterly stocks and acreage reports?
I think the biggest surprise was the fact that there were no big surprises in Monday's data, particularly on the stock side. Both corn and soybean inventories came in very close to expectations. Corn supplies as of March 1st at 8.15 billion bushels. They were down 200 million bushels from a year ago, but again, in line with expectations. Bean stocks, they came in at just over 1.9 billion. That was up 65 million from a year ago. Wheat stocks strayed the furthest from pre-report estimates. They were up about 20 million versus expectations, but certainly within the range of estimates. On the acreage side, however, we did see corn acres at 95.3 million. That was about a million above the average trade guess and up nearly 5 million from a year ago. However, new crop corn prices closed unchanged on Monday, so to me, suggesting that this figure was already discounted by the marketplace. And if this is realized, this would be the most corn acres in the U.S. in 12 years. Bean acres, they were estimated at 83.5 million, down about 3.5 million from a year ago, a 5-year low, however, very much in line with expectations there. Biggest surprise had to be in the wheat, where all wheat acres at just below 45.5 million. They were about 1 million below expectations, and if realized, this would be the second fewest wheat acres ever planted here in the U.S. Winter wheat acres at 33.3 million. They were down about 800,000 just from the USDA estimate back in January, and this was the largest reduction in well over a decade from just this Jan to March timeframe. And spring wheat acres also, they came in below expectations too at 10 million acres. So, and that was down about 620 from a year ago. So I'm guessing going forward here, new crop beans will try to gain a little bit on new crop corn to prevent further acreage switching, particularly if we have a wet spring, and also look for Minneapolis futures to perform the best here in the wheat complex here as maybe an effort to buy a few more wheat acres.
One more question, Mark. What has driven the surge in bean oil prices this past week?
Well, it really started last week when President Trump suggested the biofuels industry, big oil, and the EPA work together to reconfigure the renewable fuel standard. And this week, that's exactly what we're seeing. There's reports suggesting in meetings this week, they're proposing to raise green diesel blending mandates from the current 3.35 billion gallons to somewhere up in that 5.5 billion gallon range annually. When you look at the combined bio and renewable diesel capacity, it's been holding steady just below 6.6 billion gallons here for the past 5 months. So that's well above the current mandates, and the proposed new mandates will get much closer to what we can actually produce. Green diesel production has really collapsed in the first 3 months of this year following the expiration of the $1 per gallon blender's credit at the end of last year. And now the market seems to be gaining confidence that the Trump administration will be a bigger supporter of green energy moving forward. So prices have quickly surged back up to the winter highs. During this price dip, we've seen a surge in exports that really kind of filled the void from these lower biodiesel usage levels. So I think we're probably getting a little overextended right now to the upside. I do look for prices to kind of top out below or very near this 49-cent level.
Mark Bowman, what did the plantings tell us about the cotton market?
So the report showed U.S. cotton planted area 9.87 million acres, which was the low end of expectations, down from a February estimate in the outlook form of 10 million, down from 11.2 million last year, and it's actually the lowest since 2015. So this puts the market in a situation where it's going to need decent weather to improve the supply. But it hasn't done a good job of bidding for acres this spring. If you use the outlook forum numbers for abandonment rate and yield and usage, it would put total production of 14.4 million bales, which would be down from 14.6 million in February estimate and close to last year's 14.41 million. It also put ending stocks at 4.6 million bales versus 4.8 million in the outlook forum and 4.9 million last year. The USDA has yield at 833 pounds per acre versus 836 last year, and they have abandonment at 16% versus a 5-year average of 30%. The situation as far as conditions in the planting areas, it's been very dry in Texas up until about a week ago. We've seen some heavy rains, even some flooding there, but that may for some replanting, but at least it brings some much needed moisture to that region. West Texas is still looking dry, needs rain. The last drought monitor showed 26% of the crop in an area experiencing drought versus 6%, only 6% a year ago. A few weeks ago, though, it was up at 38%.
Sticking with the softs, Mark, what's the current situation with the Brazil coffee crop?
So expectations have been running low for the 2025 crop since the drought last year that was historic and more or less believed to set the trees up for poor production, even though they did finally get some rains last November, December that initiated some strong flowering. The question is, do the trees have enough energy to produce a sizable crop? On top of that, we've had some persistent dry weather over the last couple months that have made those concerns, brought in those concerns again. On top of that, this year is an off year for Brazilian Arabica production. Now, Brazil has seen some recent rains, maybe stabilizing the situation, but not necessarily a game changer. They haven't been enough to really bring a lot of moisture in, just enough to maybe avoid the worst case scenario. There were a couple forecasts this week calling for a steady crop last year, would seem to be a significant improvement over the worst fears, but the market really hasn't fallen hard off that news, just an initial break.
Alan, looking at the precious metals, what's your outlook for that marketplace?
Okay, well, the gold futures advanced to all-time highs yesterday and are trading higher today as flight to quality buying continues to come in to all of the flight to quality vehicles for the most part, especially gold, to a lesser degree silver. We even had the interest rate futures higher in a flight to quality bid, although some of those gains have been given back. Separately, the dollar is really underperforming. It should have been higher, so that is a sign of weakness for the dollar. Maybe that would be a question all to itself, but dollar weakness in an environment of flight to quality is a sign that there will be additional price pressures coming into the dollar. As far as gold price gains that are linked, and additionally to expectations of interest rate cuts, also we do have central banks continuing to purchase gold. Strong demand from gold-backed ETFs. Also, financial futures markets predicting that the FOMC will be lowering its key interest rate several times this year, and that is a dominant bullish fundamental for the precious metals. The first rate cut likely at the June meeting. So as far as stock index futures, the near-term price movements will be influenced by ongoing trade considerations, which continue to be a negative, although we are higher today, so that's a sign that there may be a floor developing. So it'll be the interest rate markets that I think that will ultimately support stock index futures, as currently, though, traders place a lot of focus on the trade situation. The interest rate influence will be there all the time, and I think that will ultimately be the savior for the stock index futures.
Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.